traders, Akil Stokes here, and welcome back to another episode of the Trading Blog. In today's blog episode, we're going to talk a little bit about trading expectations versus trading reality. I'm going to do so by showing you some footage from my live trading room of a conversation that we had about the two. But first, in case you did not get the email, we are having a big sale here at Trade Empower. Today is April 18th. It is tax day, which is a happy day for some as you find out what the government is giving you back, meaning that they took too much from you to begin with, or you're writing a check for some of you guys, especially some of you business owners out there. On average, we pay about between I think 15 and 25% of our income in tax. So what we're doing here is we're giving you a special discount of all or most of the products here at Trade Empower, where we're taking 25% off of everything. So just head to tradeempower.com/taxes-suck. And you can watch the video here. You can also see any information you need on what is discounted and whatnot. So wanted to get that out the way in the beginning because knowing me, I probably would have forgot. So enjoy today's video on trading expectations versus trading reality. As always, hit that like button. Please share and subscribe. And I'll see you guys later on this week with another edition of the Trading Blog. A lot of newer traders don't understand this, and this was I used to do this as well. There's a big difference between, let me see if I can find this, Steve Burns. He does a lot of really good beginner books on not Forex specific, but like stock investments. Let me see if I can find this tweet. This is going to be a pretty good tweet if I can find it. He's a great follow too on Twitter for you guys that are on Twitter. But Steve Burns here you go. Tweeted this. I don't know if he created this or found it somewhere, but a good picture, right? You see trading expectations versus trading reality, and what a lot of traders do. Let me ask you guys this: when you first go into trading, right? Is your mindset not? Your mindset is to make money. Would I be wrong? Let's just honestly speaking. Don't give me the answer that I want to hear, right? Honestly speaking, your mindset, your goal is, how can I make money, right? I think we'd all be lying if that wasn't our first initial goal. And then the next goal after that is not only how can I make money, but how can I make the most amount of money, right? How can I maximize my return? I think that's human nature, right? Yes, I want to make money. Yes, I want to make as much money as possible. And that gears us to going into the system or strategy that produces the most profit, right? You guys still with me? You still in agreement? If so, say yes. Right? So, and again, this is normal. Don't feel discouraged. If I were to give you two systems, right? If I were to give you a system that said, hey, Aaron, system A produced 60% a year, system B produced 30% a year. What system are you going with, A or B? $60% or 30%? Probably the 60%. Right? So we have these expectations of making a lot of money, and a lot of people have expectations of making a lot of money really fast, right? And we hunt out a system that will allow us to make that profit. However, what we don't understand is that the real deal breaker in trading, right? What separates the good traders from the traders that bomb out and blow everything, we call it bleeding out, right? Is, right, their ability. It's not the system, right? There's tons of systems out there, right? There's not a shortage of profitable systems out there. The difference is the ability for the trader to consistently execute that system. And what I've found, obviously working with thousands of traders over the past whatever years, right? What I've found is that if you're trading something that you don't believe in, that doesn't fit with your personality, you guys are probably going to get skunked out of this pattern formation. This wasn't a Gartley for me, but I know we mentioned it in the syndicate. If you're trading something that you don't truly believe in, you're just asking to make mistakes. Because as soon as it doesn't work out, as soon as it takes that loss, which all systems do, I hate to tell you, as soon as it takes that loss, you're going to start losing trust and confidence in it. And then you take another loss, and you just know it's going to slowly put cracks into that armor. And small cracks eventually cause big cracks. And then you'll eventually stop following the system. You'll start sabotaging yourselves, making mistakes, and you'll slowly bleed your account. So in my opinion, it is better to sacrifice returns for something that fits in your personality. I guess sacrifice returns for confidence. Does that make sense? And the same thing is with your stop loss, right? There's different techniques, right? Originally, for a lot of advanced pattern formations, when we taught them, right, the technique that was taught was, hey, a 10 pip stop loss, right? A 10 pip stop loss. Do any of you guys use a 10 pip stop loss for advanced pattern formations? $10 to 25 pips. So I should have put it this way, a set pip stop loss. Now, I'm sure that works. For me personally, doesn't meet my philosophy. I don't trust it. I don't have any reasoning to kind of back it up. And you don't necessarily need it, right? If it's proven that it works, and that could be enough trust for some people. For me, I need something more dynamic. I need something that really works into my philosophy of how the markets move. So even if the 10 pip stop loss was the most efficient way to trade, and this is going to sound ridiculous, even if it was the most efficient way to trade something, right? That doesn't mean that I would use it. So that's why we try to teach different ways of entry, different ways of exits. That way, there's something that fits each trader's personality, because each trader is different. When you go about building your trade plan, it's really personal, because it's going to be specific to you as an individual, and that depends on whether you're wildly aggressive, whether you're very conservative, whether you value structure, whether you value Fibonacci's. All of that is built upon you as a trader. That way you have a strategy, you have a plan that you are comfortable using. And the more comfortable you are using it, the less likely you are to make mistakes. And the less likely you are to make mistakes, the better chances of you becoming an independent, consistently profitable trader, the less chances of you bleeding your account and going broke. See how it all fits together? All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our TradingPower.com website, or also take a look and you'll see more videos available for you. Have a good one.